Many losses occur when you don't drop down in time frames correctly, and I don't want this to happen to you or continue to happen to you if you're experiencing losses because you've yet to figure out which time frames work best for you. This video will give you 3 tips you can begin using to make sure you're on the correct time frame before you enter a trade. My name is Shaquan Lopez, and I am a Forex trading coach for higher time frames traders known as swing traders. I am here to give you 3 tips that you can use to enter on the correct time frames. Now, be sure to like this video and share it if you find it valuable at any point you're watching. Also, don't forget to subscribe and comment down below which tip resonated with you most. Now, as stated before, so many traders lose money by not being on the correct time frames. As a swing trader, one of the things that makes you successful is understanding that higher time frames are your best friend. Now, let's break the word friend down for a second. A friend is someone who shows himself or herself friendly. Your friends in the Forex market are the buyers and the sellers. Although you'll never meet the millions of participants in the market, they leave you clues as to where they want to make buying and selling decisions. However, the more buyers and sellers or friends that you have to pay attention to, the more things can get confusing. It can become overwhelming. The participants that you observe are in the form of candlesticks, and the lower in time frames you go, the more you're going to see. But as a swing trader, there are more higher time frames than lower time frames. So it's best to begin with the higher time frames than drop down. The higher time frames are anything between the daily and the weekly time frame. Higher time frames will be your starting point, and it doesn't mean that you have to use every single higher time frame. It just means you're going to choose 1 or 2 to analyze. Now, to analyze means to examine carefully and in detail to determine the key factors or possible results. So to analyze does not mean to take action yet. Now, before I continue forward, please watch this video until the end because I have something essential to tell you, and you want to take good notes to receive these tips well. Now, analyzing higher time frames means this is where you identify where the past buyers and sellers were, where they are now, and where they're going. Now, this will require you to become an expert in identifying the trend. The trend means to tend to take a particular direction or extend in one direction. For you, swing trader, the fewer candles you see, the more you see. If you've been following me for some time, I often refer to higher time frames as a highway because they represent a longer path and or distance that price moves on your price chart. As a swing trader, you want to hold trades longer. You can't do that by analyzing every tiny fluctuation made on lower time frames. So to hold on to trades longer, you must analyze the longer trends so you can trade in one direction for more than 24 hours. Now, the trend is best identifiable when focusing solely on high and low peaks. Now, each time price fluctuates, you focus on the highest and the lowest wicks, and these are the higher highs and the higher lows in an uptrend, and the lower lows and the lower highs in a downtrend. These peaks are like signs or signals. They are like stop and go signs. The distance or pips you gain after entering the trade are based on each high and low peak depending on direction, range, and market condition. Now, ranges and market conditions can be discussed in another video, so I'm not going to bore you with those details just yet. Now, this isn't the best time to drop down in time frames because, for one, trend tells you where price will stop then go. You're responsible for plotting where those stop and go points are on your price chart. Now, once again, you're not at the entry point just yet. So once you become good at identifying trend or price direction, you're still on that one analyzing time frame. So after you remember the stopping point, and keep in mind the stopping point is where you know this is where you want to enter the trade. And some may be asking, well, Shaquan, how do I know this is a stopping point? Well, if you have to ask me that, this means you've yet to understand the strategy you're trading. Because either you don't have a complete strategy, especially if you're creating your own, which I don't suggest you do if you're a beginner trader. So you're only making things harder for you if you do that. Or you've yet to understand the whole strategy you're learning from someone else. And that's okay because the time frames are what ties everything together. It's the design. Now, within your strategy is what I like to call the bridge, and it's the structure where you need price to go. It's your focus in your strategy. Now, the focus in your strategy could be a trend line strategy, a support or resistance strategy, a supply and demand strategy, an indicator or pattern strategy. It would be best if you had one focus, okay? So before I continue, please understand that you don't need to know every strategy to be successful in trading. Just become familiar with one. Also, please understand that the more you know, the more you do, it can make you go backwards in your trading career. So once again, that's another video for the future. Now, once you understand what your bridge is, meaning where you'll enter the trade and where you want to exit the trade, now this is the time to drop down in time frames. So let's talk about the transition in time frames. You don't want to analyze a high time frame and then enter now on the lowest time frame, because the distance between the two could be too great and you'll suffer significant drawdown, or put your stop loss too close and then get stopped out before your take profit is reached. Been there, done that. That doesn't feel good. Now, I want you to listen closely to the last few minutes of this video. It would be great to drop down one time frame lower to enter a trade. So I'm going to use a family analogy because I love analogies. Now, in a family, there's a father and a mother. And let's just say they have 2 children. In order, you would not recognize the last child as being the first child. You'd recognize the first child under the mother and father. This is the best analogy for time frames. The best way to drop down in time frames is to drop down one time frame under the time frame you've analyzed. For this, I'll give you a guide as a swing trader depending on how long you desire to hold a trade, and you want to use 2 time frames together. The first is the weekly and the daily time frame. The weekly indicates that you don't mind holding a trade for more than a week, up to a few weeks, going into a month or so if you had to. Going back to why it's good to identify trend first is, if you're a swing trader who can identify trades for a long time, you want to become disciplined in identifying more extended movements in the market. And the weekly represents a more significant range of motion. So when you drop down to the daily time frame to enter, it closes the gap to minimize your drawdown, and your entry is best confirmed without confusing too many candlesticks to choose to enter from in the trade in that area you want to enter. Now, the second time frames that you want to use are the daily and the 4-hour together, and that is if consolidation is not a factor. So the daily time frame indicates you don't mind holding a trade for up to a week or a few weeks. Now, when you analyze the daily time frame, the fluctuations are shorter than the weekly, and the 4-hour closes the gap and minimizes the drawdown. Also, your best entry is confirmed without the confusion of too many candlesticks once again. Now, this does not mean that you need to analyze the time frame you drop down on. Your only action for right now is to enter the trade at your stopping point, or what your strategy causes you to use that tells you to enter the trade at a particular price point. And you may be saying, Shaquan, how do I do that? How does this look? And I want to say first, try to apply the tips that I've given you for free here. Too many times or too often, I receive emails and DMs from people who are upset because they can't get more free help that's given, but they've not tried the free resource that's here. So they stay stuck. And it's not to be mean, but I prefer to work closely with people who don't disrespect the free and sound suggestions and advice given here without the need for a price chart all the time. And it just shows that you can put in a lot more effort for yourself and what you're learning and practicing. So if you do use these tips and are ready to work with me on the price chart every week, I'm launching my new coaching program in January. This is strictly for swing traders who's ready to escape the 9-to-5 mentality. And this is best if you want to drop down in higher time frames only. One of the biggest reasons I'm teaching this is because holding trades will add time back into your life. The worst thing that you can do is stay in the learning phase too long. Secondly, this coaching program will show you how to keep your own money in your pocket and use someone else's to fund your trading career. And I'm here to help you as a coach. So as I said, this new program will be available in January of 2020. So if you've been searching for a higher time frame for its coach, then click the link below to sign up for the waiting list. And I pray that you've enjoyed these quick 3 tips on how to drop down in time frames and what those time frames are. I pray you have a blessed trading week, and I'll talk to you in the next video.